While receiving gifts from your relatives is completely tax-free, there are three events if you happen to receive any gifts from non-relatives. You still continue to enjoy the exemption with respect to having to pay any tax on such receipts. Let's look at them one after another. The first one is gifts received at the time of your marriage. Any gift that you received at the time of your marriage, whether it is from a relative or a non-relative, and irrespective of the amount of gift received, is completely tax-free in your hand. To ensure that you're able to prove to the tax authorities tomorrow that these are receipts that you got at the time of a marriage, it is a very good practice to make a receipt of all the wedding gifts that you received. It is common that you'll receive a lot of gifts in kind. So it is a very good practice to make a complete list of all the gifts that you've received at your wedding, whether in cash or kind, and keep a record of it so that tomorrow you're able to disclose that these were the gifts received by you at the time of your marriage, and hence you have not offered to pay any taxes on these particular gifts. And as a tax planning method, you can receive those gifts in the name of your non-earning spouse so that you're able to build a capital in his or her name, and when they invest those gifts from their account, it is taxed as their income, and that way as a couple you'll end up paying taxes at a lower value compared to having all the gifts in the name of the earning spouse. While taking the gifts in the name of the non-earning spouse is a good method of planning your taxes, what you must also understand is that all the gifts received by the woman in her marriage is considered as a part of her stridhan. So all the gifts that the woman would receive in her marriage, whether it is gold, jewelry, or gifts in cash or in kind, it is considered as a part of her stridhan. You should make a note of all the gifts that you've received before you decide to put it away in a locker, because this is considered as a part of stridhan, and you and only you are the sole legal owner of this stridhan. And tomorrow, even if you decide to come out of the marriage, this stridhan belongs only to you, and you can take it all with you if you were to decide to come out of your marriage. That is why it is important that when you are making a list of your gifts, you make a separate list of what is given to you as the female, so that you are able to keep a record of your stridhan for your own security. The next event that is outside the purview of taxes is the event of inheritance. So if you as an individual receive any inheritance from any person, whether they are your relative or not, the amount that you've received as a result of an inheritance, because the person who is giving away has passed away and he's left it in his will that he wants to give away certain part of his money or wealth to you, then those amounts that have been received by you in inheritance are completely tax-free in your hands. Now this money can be received by you either from a relative or a non-relative. It does not matter, as long as it is an inheritance and you are able to prove that you were a part of the will of the person who gave away the inheritance. Then the money that you receive, or if you receive anything in kind, it's going to be completely tax-free in your hands. The third event, which is completely tax-free, is a gift received in contemplation of death of a person, which means that if a person is ill and he expects to die shortly because of the illness, and he decides to give away his movable property to somebody else as a gift just in case he dies of that illness, then again those gifts that you receive, whether it is from a relative or a non-relative, they are going to be completely tax-free in your hand. While marriage may be one of the happiest events in your life, whereas the death of someone in the family may not be the best times for you, these two are the major tax planning events, as there is no tax payable by the recipient in both these occasions, and it is not an uncommon practice to see these two occasions being used as a way for people and families to plan their taxes and make the most of the provisions under the income tax laws.